Today's episode is sponsored by Future State Media, experts in off-Amazon traffic for Amazon sellers. Future State Media will build you a custom-made website to deliver sales for you on Amazon. Built to grab traffic from search engines and social media, your site can be used as a secret weapon for launching products on Amazon or just to stabilize your Amazon sales. It means you can also build an email list on autopilot. Go to futurestatemedia.com for your free guide to Google SEO for Amazon sellers today.
Ladies and gentlemen, welcome back to the show. This is Michael Veazey from 10K Collective, a subset of the amazing FBA podcasts geared to 6, 7, 8-figure Amazon sellers. Today, we are talking to Chris Shipfeling and Jason Somerville from Global Wired Advisors. They're an investment bank focused on digitally native enterprises. So something to unpack right there, but gents, welcome back to the show, first of all. Good to see you.
Thank you. Good to be here.
Thanks for having us.
So where are you coming to us from today?
We are coming to you from our office here in Charlotte, North Carolina. So Jason is in his office and I'm in my office.
Excellent. So socially distanced, but actually at work. It must be a relief not to be stuck in the spare bedroom.
That's right.
Like so many people. So tell me, first of all, we're going to talk obviously about buying and selling e-commerce businesses, specifically FBA ones, I guess, for our purposes. And in this episode, we're going to talk about the overview of that market, which is shifting all the time. Very exciting times for a lot of us in e-commerce. But let me just first of all deal with your name, because even that isn't just a straightforward. We're FBA brokers. So what is it? What is this investment bank focused on digitally native enterprises? Can you unpack that for us into sort of more ordinary English?
Sure.
Take that, Jason?
Yeah, absolutely. So I think, investment banking and kind of the services and approach to capital markets that come along with it, is really synonymous with a high level of experience and professionalism and sophistication, as well as, the ability to put deals together from, all angles, meaning not only really having great relationships with buying parties and selling parties, but having great relationships with financing parties, great relationships with other third parties that bring a lot of value to bear on the process, such as attorneys, accountants, so on and so forth. The difference where an investment bank really is a full service capital markets oriented advisory firm versus the word broker, let's say, which is much more synonymous with kind of a very kind of low touch, almost like a listing sort of a process when it comes to selling a company. So, we are all kind of from that Wall Street investment banking world, and that's what we bring to the table with this firm, and that's the approach that we take. So that's really what that part means. As far as digitally native is concerned, that's really e-commerce, SaaS, digital marketing agencies. Those are our three main verticals that we focus on.
Excellent. That will make sense to me. So I guess what it means is that you're, I suppose, what you call high touch, so very involved, and you bring an awful lot of different players in a very tight-knit team rather than kind of like, here's Bill, chat to him kind of thing. Is that more or less okay? I think I get it now. And obviously for most of us, that e-commerce is a mystery world to a lot of other people outside it, and we've all had the experience of chatting to our wives or husbands or daughters or whatever, and they just don't have a clue what we're talking about. And I guess now we've also got to get our heads around the capital markets, because what I'm all about is I think a lot of what we do as e-commerce sellers is we've got to get our heads around what it's like to be on the other side of a buying equation when we're selling them physical widgets. And we've kind of got to do the same again, but on a completely different scale with the intangible and yet valuable thing, which we call a business, right? So it's kind of a mysterious entity to a lot of us, even though we're in it. We're like fish in the sea. We can't see the medium we're in. So I'd love to get your perspectives, particularly Jason. I know you've got that very deep Wall Street background, to look at the market as a whole, to zoom right back out from the day-to-day running of any e-commerce businesses or even selling them and the mechanics of that, which we'll talk about in the next episode. Tell me about the overall sort of picture, the demand for e-commerce and we'll stick with that rather than other SaaS businesses and things, I guess, and the supply and how that's looking for the seller's perspective.
Yeah, and I'll even kind of drill it down even one further to kind of the FBA world in particular, because I know that's, your audience's focus. So, I mean, I think the reason why FBA sellers now should become aware of how the world works in terms of, selling a company, it's a very good reason. It means there's a lot more demand for companies that look like that. And so it's not a bad thing that they're having to come up the curve a little bit and learn how that world works, and learn how to maybe, get their business to a point where it is an attractive potential acquisition for a party. So I think it's all good reasons to have to learn some new acronyms and some new lingo and things like that. So at least there's a payoff for all that extra work. But the short version is, the market for e-commerce based businesses from an acquisition standpoint, including FBA businesses, has continued to get stronger and stronger throughout the course of this year. I would say at the moment, it's incredibly strong from the standpoint of you have a pretty deep buyer pool. You have a lot of capital that is looking for businesses of that type. And that is helping sellers not only successfully exit, but successfully exit at valuations that are increasing over and over again. And I would say that, right now the pressure is very much to the upside as far as the those valuations are concerned, and a lot of that is being driven by some of these COVID effects that we've seen on the overall economy. And so while there's some macro difficulties out there that we all, I think, are well aware of, within e-commerce and online consumer-based businesses, many of them, and I would say certainly all of our clients and the vast majority of potential clients that we speak to have actually experienced positive effects through this time. So you've got a lot of money effectively chasing few assets, relatively speaking. And so that's generating a very strong market from a sell side perspective for e-commerce businesses, FBA in particular. And what we've seen there is in particular around the FBA space, there's been a lot of capital raised specifically for acquiring Amazon-based businesses. That is something that has really ramped up in the last 2 years. In the last year in particular, there's not a week that goes by at this point that we don't get a call from a new fund that has been raised to go out and acquire Amazon brands. So that, again, that's all good news for successful FBA sellers.
Yeah, that is really good news. I guess it's so. Tell me a bit about the. There's a few ways to go with this, but I mean, the first thing is the demand side is you're confirming what everyone suspects and hears, which is that there is more and more money chasing the FBA business type asset. Now, what about the supply? So you say there is a limited supply. I know a lot of people who own Amazon businesses. And I suppose a lot of us who swim in those waters know those as well. So what's the limitation on supply? Is it just because they only invest in a certain size of business and there is only a limited supply of businesses there? I mean, it's obviously good news for us as sellers, but I want to understand that a little bit more.
Sure. Well, I think first thing to remember is supply and demand is always a relative thing. It's not really an absolute thing, right? So the demand relative to the supply is very much at this point one-sided or heavily weighted to the demand side. And I think that really, I mean, in terms of why that could be, well, first of all, it's the speed at which this capital has been and can be raised. The capital can be raised very quickly now for funds that have a particular focus that is attractive to investors. It's easy to raise money quick. While businesses and sellers that are or potential sellers arrive at the decision to sell typically over a longer period of time. So you tend to have a lagging effect there, where the demand comes first and the supply tends to follow on later. And then at some point, in the way markets tend to work, the balance will shift. We don't know when or where or how, but at some point the supply will outpace the demand, and then you'll see the effects of that in the market. But I think the other thing right now that potentially is delaying some companies from coming to market is something relatively obvious, and that is strong, looking forward to strong holiday sales. And so many consumer products oriented businesses are very fourth quarter heavy in terms of their seasonality. So many of them want to wait, see how strong the fourth quarter is, get those numbers effectively on the board. And we're expecting a really active first quarter next year once that happens, because the message to sellers that there is strong demand for their assets is getting through. I mean, more and more people are understanding that. And I think we hear a lot of people that are waiting till fourth quarter's over, and they're going to try to go to market in early next year.
Yeah, I can see that dynamic. It's interesting. And what you said about the speed of getting capital together versus the speed of the decision to sell is interesting. It's so interesting to me. I mean, one of the things you mentioned is being willing to learn the logo and lingo. Let me try again. One of the things you mentioned is being willing to learn the lingo and a bit of the sort of mindset of the investors, because they're going to potentially be your buyers. But I think even more importantly than that, I think the way that investors look at things and the rising and falling of trends in markets and supply and demand balance and imbalances is, I think, a really healthy way to look at a business anyway, because a lot of people get very locked into a particular business model because they happen to be on an upward trend in that business model. But what they're not perceiving is the value of that business model is time limited. And I like the reality check that at some point, the supply and demand balance is going to shift away from being a seller's market. And somehow as a mentality, I find that much healthier than what happens in a lot of digitally native enterprises, as you put it, is that people lock into a particular business model, a particular platform, and assume that that's where the value comes from. And I think actually a lot of the value comes from the trend happens to be going up on that platform at that time, right? What are your thoughts around FBA as a proposition for investors as compared to e-commerce outside of FBA, for example, Shopify stores and so forth, and other types of digitally native enterprises? How does that sort of compare for the buyers right now?
Well, I think that the understanding and the ability for investors to believe that they can really kind of get their arms around the risk around a particular FBA business or FBA businesses generally is still evolving. For a very long time, there was a reluctance, kind of a broad reluctance for a lot of capital to purchase or invest in businesses that were primarily FBA oriented, because of the unknown or the perceived unknown risk of Amazon. Amazon being a black box, an algorithm that's never explained, and what the way we describe it is the Jeff Bezos gets up on the wrong side of the bed risk, right? I mean, just these vague sort of, hey, I just never know what might happen, and I don't want to have that much concentration of my business to the whims of Amazon, right? And so over time, though, what's happened is, the more, like anything else, right? The more time passes, the more information is available, the more people are able to maybe think about the perceived risk and actually, figure out what's real about that and what's not. I think right now what we're seeing is, all else being equal, there's still a higher price for e-commerce businesses that are not primarily Amazon in terms of their sales channel. There's still a bias in the market there from a valuation perspective. But I also think on the other side, with Amazon continuing to gain more and more market share, and the idea that the consumer is also shifting. Another conversation we have around here a lot is the idea that consumers just are not as brand loyal as they used to be. They're much more likely to try a new brand in a given product. And Amazon, quite frankly, is a big reason for that. I mean, most people that I know, if they haven't purchased a product before and they go on Amazon and they look for one, it doesn't really matter if they haven't heard of that brand before. If the listing is good and the reviews are good and they know they can always return it if it doesn't work out, then they're going to try it, even if it's a brand they've never seen. So consumer behavior shifting, and Amazon's actually doing, changing a lot of that. And I think a lot of investors are understanding that. They're understanding that, you cannot evaluate an FBA business with this, with the mindset that you had in 1998. Like that just doesn't work because it's 2020 and everything's different, including the consumer.
Very interesting, and that makes a lot of sense to me. And the other thing that strikes me is that we were talking just before we started recording about various governments and the ways that they act, and they're not always driven by rational or economically rational imperatives, right? And one of the things that across the planet in developed world, I would say in America, Europe, UK, is that maybe less in the UK than elsewhere, but the so-called capitalist countries, actually, when it comes to push comes to shove, there's a lot of government involvement in the market, and generally the big companies get looked after by government and the smaller businesses lose market share. And certainly the e-commerce world has been interesting, that although e-commerce as a whole has blown up, the market share of Amazon may have shrunk slightly, but the market share of marketplaces, I think Target, Walmart, has blown up in the States as a whole, has probably consolidated, right? So in other words, the really big players have just got even bigger as a market share percentage as well as in absolute terms. And so I suppose investing in an FBA business enables one to take a slice of that without just buying Amazon stock, right? Is that a summary of how you would see things? What are your takes on that?
Yes, although I think also, when it comes to capital that is raised for a particular purpose, it doesn't always have the choice necessarily of doing a relative value type of analysis and saying, hey, we could invest this money in Amazon stock, or we could go buy, 25 different FBA businesses. That's not really the choice. Sometimes it's part of the discussion when they are raising the capital with the investor base to convince them, hey, you know what, you shouldn't just go buy Amazon stock. You should give us your money, and we're going to go and we're going to create a higher ROI by investing directly in these third-party selling businesses rather than Amazon stock for, XYZ reasons, et cetera. But, I do think that, from a relative value perspective, the market is understanding. I mean, the FBA businesses are absolutely valued much, better than they were 2, 3, 4 years ago. But they still have a way to go to even sort of catch up with their, non-Amazon, call it, peers. And so I think a lot of investors are believing that now's the time to purchase these businesses at a relatively cheap price, compared to where they might be in 2 or 3 years from now. And that's not lost on them because, a lot of these guys aren't necessarily a buy and hold type of strategy. They're looking at the future and saying, well, if I buy this today for X, what do I think I can sell it in 5 years for, right? And what are all the factors that are going to lead to that appreciation and the value?
Interesting. And I suppose what you're saying is not buy and hold. I guess for me, 5 years feels like a hold, but I guess in the investment community, again, the timescale that people often are looking at is sort of exponentially bigger than somebody who's running a business where, as a manager, you're pushed into thinking day to day, week to week, if you're lucky, quarter to quarter for the really grown up people. So this is a different perspective, a different timescale perspective. But it's very interesting what you're saying also about the money's raised for a purpose. So if you've got a fund that is there to get, I guess, relatively high risk, high return type investment, it's not the same as like a pension fund that might invest in Amazon stock, but it expects to hold it for 20 years, right? So that's a very important point. So I guess we're not necessarily directly competing with people wanting to buy lots of different asset classes. We're competing with other FBA businesses, I guess. Is that a reasonable summary?
Yeah, in a way, the competition for capital, really is before you get to the stage of selling the business to the ultimate third party, because the fund managers are out there, they're competing with each other to say, well, my strategy is better than the next guy's strategy. That's where that competition is taking place. And then, but once that's occurred and the capital has really been focused in theory on certain types of businesses, that's what they go and go buy. I mean, bond fund guys buy bonds, stock fund guys buy stocks, private equity funds buy, private businesses. And that's just kind of what they do.
Yeah, it's a good reminder that people specialize, and I guess it kind of sounds really obvious once you put it that way, but we need to remember, and this is why I think the educating ourselves about the bigger picture of this, I'm grateful for your input on that, because I think the more we understand the structures, thought processes, time frames, and mentality of the people that we're trying to sell to, and where we're trying to sell to, the more we're going to have a successful exit. Well, this has been a fascinating conversation. I'm going to leave that one there, and I know the next one we're going to have a quick whip through some three things that you should be thinking about as a business owner to get your exit strategy in order. I know, Chris, you're going to be very involved in that, but for the moment, just want to say big thank you, Jason and Chris, for that really interesting overview.
Great. Thanks, Michael. Glad
Absolutely.
to do it.
Thank you.